Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we decode Nifty, analyze Nifty on multiple time frames, and try to find out the trading plan which we can use to get the best set of probable, most probable, high probable trades for the next trading day, right? So in case if you like the simple way in which I analyze Nifty, I keep things very, very simple. It is pure price action based trading, very little to no indicators use, right? And in case if you like that, please like the video, subscribe to the channel, share it with your trading friends, as well as put down anything that you might have to say, be it words of appreciation, be it words of criticism. I am open to everything. In the comments box, I would be glad to read those, right? So on that note, let's start with what we had planned for today. It was a video that I had posted on YouTube on Sunday, and we'll see how did we trade that particular today's day and versus how we planned the entry, how did we trail the stop loss, right? And some again some rules with regards to stop loss, which I'll explain in today's video. So please pay attention and focus and watch it till the end. So our plan yesterday was to create a long above this particular zone with a pullback, and looking at short only below this particular zone again with a pullback. Now, why the reason of this particular zone, or how why was this zone important for us? People who would have watched the last video would have known that this was the 50 to 60.8%, 61.8% retracement zone of this entire fall, right? And last day the market had taken rejection exactly from these levels, and that was the reason we wanted market to give us a good closing above this particular level before creating any long entries, right? So markets opened almost flat, consolidated for a good 15 minutes, and then gave us a closing above this particular zone. The second candle, consecutive candle, also formed was a bullish candle. Now, at this particular point, I'll be honest, I thought that market might not give a good pullback and simply rally, but this pullback which came in was a really good pullback, kind of also a retest can be said. Now, see, there are two schools of thought. Now, I waited for this particular zone to be taken out, right? Although Nifty consolidated for a good 15 minutes, was above this particular trend line when this breakout came, right? And a trade could have been initiated here as well, but then that would have been a bit aggressive uh, because this is still a retracement level from which markets could have reversed, and that was the reason I did not take this particular trade around here, but I waited for this particular trade. Now I'll just put the long tool which is here. So once I entered the trade, my SL was right around here. Now if you see, the markets went up, came down, went a little sideways, came down below our entry price as well, right? So, should we have taken a loss over here? No. My simple rule is that I need at least a 1:1 trade for me to book some quantities. Now that this particular trade did not, so for 1:1, it would have to reach roughly around these levels, which it did not trigger. So for me, until unless 1:1 is 1:1 risk reward is reached, the original SL stays, right? Either I'm taking 1:1 or I'm taking this complete SL. There is no in between, and this is a rule which you might think is stupid, but trust me, when there are moves which will test because of volatility, they will come down a little bit and then again go up. Those are the trades that will give you some good rewards, just like today. So I did not exit it around here, and I got a almost 1:2 trade, which is still better. So the minimum I target is 1:1. Anything above that is good. So markets formed a kind of a double top around here, and in case if it would have reversed from here, I would have taken my SL around these levels, right? I But then market just took some liquidity around here and then went all the way up here. I exited somewhere around here when the market was started to become sideways. I exited around here. There were no further trades from me for throughout the day. So this was the only trade, and the reason I have put in this long tool is to show you how the markets showed you a kind of a double top forming over here with a breakdown. But again, with a breakdown, I did not exit my long position. I held on to it Because for me, once you take a trade, I know my SL is here, right? As I always tell you, once you enter a trade, you should know where SL is. And either you take your target or you take your SL, right? So this was the simple trade that I took today, although it was a very long trade, took a lot of time, tested a lot of patience, but still, once you are in the trade, follow the system. Now, again, for tomorrow, well, let us start from the daily time frame, right? I'll just hide all the drawings for the market you to be able to understand. So, markets have not given a proper retracement, but it has kind of given a retest of this particular zone, which it had broken out of. So this was the zone that we had drawn, which was a good resistance zone. Market broke out of it, retested it, and is now on the way to maybe continue higher. Maybe again might come down because this was the level of safe retracement which we are still ready for, right? So market has shown some very good strength today, and for us, it simplifies the trading even much more. Plus, the fact that FIIs have been again net buyers today, and I guess it's almost 6, 7 days of consecutive buying from FIIs in the cash market. For tomorrow, we'll keep the plan of action very, very simple. We'll mark this particular high, which was the day before yesterday's high, and also a good resistance zone, right? This was the zone from which the markets took a good fall. So tomorrow, let's market give me a closing above this, and then again I'll wait for my pullback and I'll take a long entry. So this will be the plan of action for taking a long trade. Coming for the short side of the market, we should be prepared for anything. The war is looming around, and the markets can do anything, give us some good surprises. So what we'll do is we'll trick this particular trend line, but we'll wait for this, not this zone. Yeah, this is kind of the 50 to 61.8. Just give me a second. If you take this particular bottom to the very high, this is the zone around here. So this zone needs to shift. It has done its job for the long trade. Time for it to give us. So yeah. I delete the fib tool, and we will look at a short only below this, right? So maybe market gives us a gap down opening. In that case, only to be favorable. The most favorable trade for tomorrow would be if market opens flat, slightly gap down, slight gap up, and gives us a breakout of this particular level, and then goes up. We can expect targets. Again, let's not go and discuss targets. But yeah, 24,800 is something which I am expecting, not tomorrow, not necessarily tomorrow, but yeah, that is something which I am expecting. So this would be the next level of resistance around here. So that's it. This is the simple plan for tomorrow. I hope you guys will make good use of it. It's always best to be prepared and then have a plan and then to trade that particular plan. So that's it from my side for today. This is your Nifty Guy signing off. Cheers. Have a good day. Thank you, guys.